Hey everyone, happy Friday and welcome to Trader Tales. It's your host here, Alissa Coram, and joining me on the show today, we have Mark Minervini, two-time U.S. investing champion, market wizard, and founder of Minervini Private Access. It's great to see you, Mark.
Oh, great to be here. Thanks for having me.
So I only wish it was under better circumstances that we are meeting, but I want to talk to you, and that's because of the recent passing of IBD founder William J. O'Neil, and I wanted to get your thoughts on Bill's legacy and what he means to you, Mark.
Well, Bill meant a lot to me because he inspired me very early on when I first started, and to be honest with you, I'm not sure I would be here doing what I do today or have had the success that I've had in the market if it wasn't for Bill O'Neil. He's a tremendous inspiration in my life. I can go on. I have a lot of Bill stories. I met Bill a good number of times, and of course, David Ryan, his right-hand man, his superstar protege, if you will, spent close to a decade with me as my co-instructor, and so I know a lot about Bill, very intimately. Bill was an incredible genius, not only as a trader, as a businessman, as an educator. He's a great American success story, and he was a great American. He was a living legend, and he'll always be a legend. So I'll always remember Bill. And I love taking this time to pay homage to him, and it's great to be here with you. I'm glad you're doing this.
Yeah, absolutely. We appreciate it, and very well said. So Bill meant a lot to you. Tell us your favorite story. You said you had several stories. What's your favorite memory or interaction or nugget of wisdom from Bill? I know there's many lessons.
Well, it's funny because people come to, when I do workshops and stuff, and I have a reputation of sort of blowing my gasket every now and then and going on tangents. And I don't know, maybe Bill and I were similar in that way, because I saw him rip some people in the audience a few times. So, the one thing that I learned from Bill, and it came from a conversation. It's so funny because I get the same question all the time. People say, yeah, well, what about this company? It's got the earnings and management's great. And, and it's Coca-Cola. They're not going to go out of business. And meanwhile, the stock has, got a 13 relative strength. It's in a nosedive. It's in a downtrend, and someone asked at a seminar one time, Bill, this question. He said, well, the chart's bad, relative strength is bad. And they're like, yeah, but it's a great company. And he's like, yeah, but the chart's bad. And, it just doesn't look good and it's not acting right. And they kept pressing him. And finally, he just blew his lid. And he's like, look, if the company's so damn great, the management's so great, the earnings are so great, why is the stock going down? Why is it not going up? And a lot of wisdom in that. I literally built a career on that principle. And that is never trust the story, never trust the numbers without confirmation from the chart. Why is the stock going down and why is it performing so poorly if everything's so great? It's what I call differential disclosure. And that's a principle that was born out of that rant from Bill at a seminar.
Yeah, it sounds like something that'll stick with you forever. Seeing that, very powerful stuff there. And something else that I know a lot of people close to Bill, or even those who have just read his book or have heard from people who know him, something about him that was a quality that really stood out about him was his optimism. Talk to me about your thoughts on how that really was shining through in how he presented his lessons to investors all around the world.
Yeah, Bill convinced me of a few very important things. And this is the same type of coaching that I try to do now going forward and carrying a similar torch forward. And that is that, first of all, the real job of a coach, not only to teach you the plays and the tactics and the strategies and so forth, whether it's a football coach, whether it's a trading coach, but the real job of a coach is to convince you that you can do it, to give you or the team confidence. Because without the confidence, if you don't believe you can do it, then it doesn't matter. You can have all the tools and tactics in the world, and it's not going to happen. Bill convinced me of that. He's convinced people around the world, probably millions of people. And if there's so many people, investors that are traders and investors now because of Bill. But he really convinced me of a few things. One, that I could do this if I worked hard, if I had a relatively well working brain, and I was willing to work, that I can do this. And he convinced me that there was this amazing opportunity, that the greatest opportunity in the world was right in front of me. It was the stock market, and there was no prejudice. If you had the skill, you get rewarded, and if you didn't, you lost money. And it was a really pure, just beautiful opportunity that was there for all to participate in. And those two things that he convinced me created a fortune for me and changed my life profoundly.
Mm-hmm. And talk to us a little bit more about Bill as a coach, instilling that belief in yourself. But and he also would use sports metaphors and talk about great sports coaches, about how to really get that mindset. And I know,
like Newt Rockney, Vince Lombardi, Newt Rockney, he often quoted.
Right. So
Bill,
talk to us
was
about
a man of no excuses. Another thing that I learned from Bill was he was a man of no excuses, pure personal responsibility to the 10th degree. And he said, this is another thing that was really stuck with me. He said, if you get it wrong, if you lose money, you missed something. It's your fault, and not even to blame, but it's your responsibility to do the homework. And if the stock comes out of a base and it looks perfect and everything's right, and it doesn't work and it fails, you missed something. Either your analysis wasn't right, it was flawed, and the base was flawed in some way, or the market's not right. So it meant that the market's never wrong. Only you can be wrong. And again, these are principles that I literally built an entire career. I'm now 40 years of trading. So, and I met Bill O'Neil in the 80s. I actually had the very first IBD. And I went to one of the very first seminars with Bill and David Ryan when there was maybe 25 people in the room. And then years later, I went to the Hilton in New York City, and there was 2,000. So right from the very beginning, I saw it from the ground up, from the birth of IBD. But a man of absolutely no excuses, and just incredible personal responsibility. And that's something that, a lot of just great life lessons, from this man who was just way ahead of his time in so many ways.
Yeah. So with the profound impact that he had on you, what is it exactly that makes you want to carry on the torch of teachings of how to become a successful investor, and so many life lessons in that too? Yeah.
Bill's book was so instrumental with me, and it gave me another thing that I think I learned from Bill. I learned it from other people too, but really a big lesson, or something that I got from Bill, was this feeling of that when you're highly successful, it gives you a responsibility and it gives you leverage. And that the responsibility is that you use that leverage in a positive way. So Bill didn't use his success, in a way where it was self-indulging. He gave back. He didn't have to teach the world and do these things where, again, lots of people are very rich because of Bill O'Neil. So by affecting my life profoundly in that way, Bill taught me that I could do the same. That he affected me that way, and I realized that if I got the success, I could do the same. I could take that success and I can inspire other people. So my quest, if you will, or this mission, became something more than just making money and buying and selling stocks. It became a very big vision. I almost had that Bill O'Neil vision of now setting out to figure it out, teach the world, and help others. And my vision went from, instead of days and months and years, it went into decades and seeing very, very far out. So I think, by default, I think those who read my books and have benefited owe some of that to my roots, to Bill O'Neil.
Mm-hmm. Yeah. And then, that pay it forward mentality there. I like that. And so let's talk about some of the teachings that most resonated with you, Mark, from Bill O'Neil, and things that you feel like are very core to your belief system as an investor, other than price pays, story is, nothing without the chart action to support it?
Well, Bill convinced me that the law of supply and demand is timeless, and that was backed by study. And I didn't just blindly trust him. I went and turned on the computers and ran my own studies and really did some in-depth research, and then had anecdotal evidence for decades. But he convinced me that if you could accurately read and depict supply and demand, then you basically had a golden goose for the rest of your life. And that's precisely what's happened for me. That, this golden goose has been laying eggs for me for, better part of 3 decades. And it's all because of learning how to read supply and demand. That's why to this day, people say, you just use bar charts and just couple, moving averages and volume. Yes, because again, Bill O'Neil taught me that everything was right there. That's all you needed. You didn't need all the indicators, MACD, stochastics, all these things. They can only be coincident or lagging because they're based off of the chart. They're based off of the price, the volume. So they can only be coincident or lagging. So all the answers are right there, but you just have to learn how. And when you saw, and some people say this about me, they'll come to a workshop and they'll say, wow, I've been doing this for 10 years. I didn't realize how much I didn't know. That was how it was with Bill. When you have a discussion with him, you say, wow, the depth of knowledge is just unbelievable. So some of the things, of course, the very most I don't want to say basic, but most important that I learned is to always cut your losses regardless. You have to have a risk plan. Buy the best stocks with the best earnings. Matter of fact, I just heard a little clip with him, and he was just saying, he'd look at the stock and the chart, and if it didn't have the earnings and sales, he'd just pass on it. And if you even ask David Ryan, David said, I've never really seen Bill. I don't think I ever remember him once buying a stock that didn't have earnings and sales. So he would pass on maybe these biotechs or these stocks, and maybe pass on some opportunities, but really made sure he was a stickler with the criteria and being super disciplined. Buying coming out of bases, not chasing the stocks up, extended, which I did in the very beginning. I constantly did that. Nailing profits down when you have them. Never letting a good sized gain turn into a loss. That was one of his rules that we talked about actually personally in a discussion, and how a lot of investors will get these gains and they let the whole thing get wiped out, and how he pointed out how foolish that is. We've had 30% profit at 20, then at 10. Why would you let it come all the way back and turn into a loss? All these things that people can relate to today, I did them all. I made all those mistakes. Bill O'Neil made those mistakes. David Ryan made those mistakes. We've all made those mistakes. So just tons of just timeless pieces of wisdom.
Right. And something else core to the Bill O'Neil philosophy was market timing. So your thoughts on that, because Bill was someone who was really good at knowing when to be in and when to be in heavy, and when to stay out and avoid significant losses.
He had incredible, his finger on the pulse, and his read was amazing. And people think, the follow through day, they think it was all based on being in the market. If the general market was, positive from a follow through day, that's true. But the leading stocks, he was so amazing at reading the stocks. I remember speaking to someone who's one of his institutional sales reps at O'Neil, and they said, they were with O'Neil, they were with Bill for decades. He said, Bill's the type who could go look at 100 stocks and pick the one stock that's going to triple. Pick that one stock that's going to be the super performer. He had those kind of X-ray eyes. But here's something I wanted to point out, and that is that I studied Bill's trading. And I've developed into a shorter term swing trader, a lot of tactics and stuff that are sort of offshoots, or even more. It's been called more forensic or surgical. So I'm a shorter term trader. I've taken the Bill O'Neil doctrine and I moved forward with it, but created a style that's faster. But what I did was not only study try to emulate his trading. And what I really did is I got into, how does Bill think? How does Bill O'Neil think about risk, about the markets, about these various topics? And when it comes to someone like David Ryan, Scott O'Neil, his son, all the folks at IBD, myself, when it comes to trading, we all think very similar. We can relate to each other. We're all basically, like I said, moving forward with, with sort of the Bill O'Neil doctrine. And that came from, Bill didn't invent these things. He was, he was standing on the shoulder of giants to a certain extent and paying it for, and it was paid forward to him. William Giller is where the cup with handle came from. Richard Love, if you go back, you see Richard Love did a similar study as Bill. Bill, of course, studied Jack Dreyfus and studied all, looked at the best mutual. I did that with Kenny Hebner. I loved Kenny Hebner, and I studied when he had the fund that was just beating the pants off of everybody. I did it with Bill Berger too, the Berger funds. I met Bill Berger. He was an amazing man. Bill studied Jesse Livermore, and then he took this and crafted it into a systematic approach, and that's where the genius was. And then I came along, and it was Bill O'Neil, Larry Height, who I happen to be great friends with now, a market wizard, Paul Tudor Jones, Stanley Druckenmiller. Those were the guys that influenced me, and then I took it to another sort of 2.0, if you want. And I'm sure people are going to take it from me and from the people now that are the next generation, and they'll take it to 3.0. So yeah, but I really studied on how Bill, his thoughts were, and how he approached things, and then I was able to understand more of the trading tactics and be able to do them. I had to bridge the gap, because prior to that, I couldn't even see what he was saying, because I wasn't thinking in that framework.
Right. So a question from the audience, Mark, that I think is a great addition to this discussion is, when you first read Bill's book, and you said you started going to the seminars and all that, and got more steeped into the O'Neil doctrine, how long did it really take you to become a better trader? How long did it take you to find your groove so that you were winning more than you were losing?
Don't be discouraged. But it took me a long time, but the tools were not there like today. And I started in absolute abject poverty, and had very little money, and had no resources whatsoever. I spent my very last dollars to go to an O'Neil seminar. I was broke, and would do anything to go to those type of seminars. Anthony Robbins, all those type of motivational seminars. If I had $500 left to my name, I would spend it on going to a workshop. But it took me about 6 years before I even became profitable. But you didn't have then what you have today. You have wonderful books. You have incredible, you've got YouTube, you've got Twitter, you've got a lot of education, and people willing to teach that will shorten your learning curve. When I first started, we were reading books in libraries about strategies that never worked in the first place. Bill O'Neil's was like the first book that was based on like real life, of somebody who was a true success and did it and walked the walk and got the results and was willing to share it, as opposed to academic books that were theories and they never even worked in the first place. So it took me a long time, and I had to fight with a poverty mentality. And I started very young too. I quit school at 8th grade and was trading. I was 18 years old when I first started trading in 1983. So I was very immature on top of it. I didn't really have a very mature brain at that time. So it took me a long time, but the learning curve is so much shorter now, because there's so much more available.
Do you think that's another reason why Bill O'Neil resonated with you so much, was his message of optimism, and that if you worked hard enough, you could do it?
A beacon of light.
Yeah, absolutely. And okay, a couple more questions here in the audience. Someone was saying, well, what about the new? Bill focused on new companies, stocks hitting new price highs, of course. And you talked about earnings and sales and those being so critical. And it seems like that's how the new shows up. If it is something that really is catching fire, it's going to show up in those numbers.
Yeah, I mean, when you look at the research, you look at the studies of the biggest winners, the fastest moving stocks, the grand majority of them, 70-75% of them, already have the earnings on the table. And there's lots of stocks that go up and don't have earnings, but and this is another thing I learned from Bill. You can't go you can't go forever without earnings, without sales. With, you know, you can go on profit margins, you can cut costs, and you can rid losing operations, but that only goes so far. At some point, you got to have sales. You know, you have to be selling some product, more of a product, or some new products. So, you know, trading opportunities come and go, but really the big moves like the Apples, like the Amazons, those are driven by sales and earnings. And Bill made sure that, you know, he had all that on the table. And that's not just based on his gut feeling. It was based on doing intensive study. He had the first, you know, computer database, the most extensive computer database. Again, with the technology way, way ahead of his time, doing this stuff back, you know, in the 60s and 70s, and just, you know, everything is backed by really great, sound research.
Yes. And so you said you studied Bill's trades. One of his initial big winners was in Syntex, a huge gain that he had on the birth control maker. But how did Bill influence you in terms of knowing whether it was a stock that you should hold for a 10 bagger or a big move versus just taking a profit at 20% or so and moving on? How do you know?
I'll be perfectly honest with you. I've never been able to perfect that. And to this day, I still don't. I've never held a 10 bagger, so I couldn't even tell you. You know, probably the biggest stocks that I've held were up, you know, 400 or 500%. AccuStaff was one, LA Gear was one in 1989. You know, I've had Yahoo, Amazon. I've had some of these stocks that have made very big moves. The way that I usually have done it, even like in something like Yahoo, I bought Yahoo in 1997, coming out of its very first base. I bought Amazon in 97, coming out of its very first primary base after a new issue. Yahoo, I went up 100%, I sold it. Then I bought it back, it went up 60%, I sold it. I bought it back, it went up 30, 40%, I sold it. I bought it back, it went up 20%, I sold it. So when it all came out in over a couple of years, you know, I made a pretty big lick on Yahoo, but it was sort of trading it a bunch of times over that big. It went up 8,000%. I didn't hold it for that big move. It's just, and again, this is something about trading too. It has to marry with your person. It has to meet your personality. Some people are more jumpy and some people are patient. I happen to be one that, you know, when the money was on the table, you know, I never like to give it back. And so I love hearing the cash register ring. So I gravitated to a shorter term type trading. So I've never mastered that. And it's always been something that I've admired about Bill that I haven't been able to. Fortunately, it hasn't been necessary for me. My compounding has amassed as much or more than if I held even the biggest winning stock. So I found another way to do it in the same names.
Mm-hmm. Fantastic. So another question for from our audience is, so you mentioned thinking about the mindset of Bill O'Neil as you're trading. What do you think Bill would say about the market right now?
I think he would say not much has really changed, except things have gotten faster. You still have, you know, most of the market is dominated by people who are relatively new. I just did a poll on my Twitter account of how many years you've been trading, and I think it was 82% were below 10 years, and the majority were 5 years or less. You know, when I think about my career, 40 years, to think what I knew in 5, I wasn't even profitable for 6. So when I find that, you know, 2/3 or 70% of traders only have 5 years under their belt, you know, that's like, you know, a 1-year-old, you know, in terms of a lifespan of a trader. So, but people think that, you know, they've been trading for a few years and they should be getting these big results, and that's just not the case. So I don't even remember the original question, to be honest with you.
Yeah. Oh no, it's okay. What would Bill think about the market today?
Yeah, I don't think he would think anything's really changed much. As a matter of fact, like, given this bear market, you know, this is like a garden variety. This is it's actually, I think, one of the easiest bear markets ever to deal with, because it's just, the character has just been the same the entire time. It hasn't really changed. It's not that tumultuous. The volatility has been relatively low. This is really a standard, you know, bear market. It's just not accompanied by a big recession at this point, and that's why it's been relatively mild from the indexes. A lot of stocks have imploded, but no different than you saw in, 90, 99 blow off. And then you had the bear market. Then you had the big bear market in 08, 09. Every now and then you get where, stocks get way ahead of themselves. They blow up beneath the surface, and sometimes the indexes hold up, better. But, I don't think you would think anything changed, and except maybe the speed and the technology. And that's the only thing that I see that's really changed. I think it's easier than ever. And I think he would agree that trading is easier than ever. I often tell this story that, when I first started, spreads on NASDAQ stocks were $3 to $6. Commissions were $250 to $300 a trade. You'd call a broker. You'd have to wait for 30 minutes to get a call back. The stock had already hit your stop. You don't even know if you own it. Mm. And I made money during those periods. So, then you got internet access and instant execution, and $60 commissions. They came down. Ernie Oldie started a company called Oldie Discount. We opened an account there, and it was discount commissions. Like, oh my God, now we can trade. And I made even more money, and then it got faster, and I made even more money, and every time it got faster and the access was better, I made more and more money, and it just became easier and easier. And it's easier now than ever. Mm-hmm. See, and that's, a good example is I won the 2021 U.S. Investing Championship in a very difficult year. The only way I could ever do that was because of technology allowed me to zip in and out in a nanosecond and really, operate in a difficult environment in short-term trade. I could never do that years back. People say, oh, it was easier back in the day. Absolutely not. It was much more difficult.
I couldn't imagine.
Furthermore, was trading at curb brokers. Look that up, what that means, trading with curb brokers. And,
okay. I will.
Not you. Everybody.
everybody. I will. I'm interested. Speaking of 2021, do you happen to see any similarities between 2021 and what we're seeing in 2023 with the narrow leadership? It seems like it's the mega cap techs, AI theme. Mm-hmm. Perhaps it's broadening out a little bit, chips and software participating, maybe breadth improving a little bit, but overall, for the vast majority of the year so far, the leadership has been pretty narrow. Right now, there's only out of the S&P 500, 25% of the market cap is in 5 stocks. 42% of the market cap is in 20. Okay, 20 stocks out of 500 are moving 42% of the market cap in the S&P 500. The NASDAQ, we have the NASDAQ well above its 200-day, and we have 32% of stocks above their 200-day moving average. So this is one of the thinnest markets I've seen. So a roaring bull market ripping off from here is probably not yet taken hold. I am surprised that I thought the big tech, the big mega caps, they topped. They topped. And I thought that they were probably going to underperform pretty dramatically for a while. But I did believe that there could be a snapback, and you could get that reflex snapback. And we'll see now if it's got legs. I don't think it's going to. And eventually we're going to have to roll into maybe mid caps, small caps, because they've been out of favor forever, decades. And maybe we get a big bull market there. But the liquidity, the money just goes to that liquidity. There's a lot of money, a lot of institutional money. It needs the liquidity. It goes to the safety. It goes back to mommy. It goes back to the nest. But eventually, there's all the elephants, ran through the keyhole here. We'll see. But I don't think it's really any different. To me, I went through the crash of 87, bear market in 90. The big bull market and the blow off in 99, and the massive multi-year bear market 2000, 2003, the great financial crisis 08, 09, all these, the COVID, of course, we just went through all these bear markets. I think I went through 9 bear markets. I haven't really seen anything different. It's just the names change. Sometimes the declines are bigger than others, but all bear markets lead to bull markets. Bull markets are born out of recessions. We'll have another great bull market. And who knows, 20, 30 years from now, people will be going, oh my God, the Dow's at 100,000. It can't go any higher. The Dow will be at 100,000. And someday it'll be at 500,000. It's unless the planet's going to, implode. So, but that's another thing. Bill told the story. He said, somebody was on the corner one day looking at this piece of real estate and says, I could have bought this piece of real estate 20 years ago, for $30,000. Now it's $200,000. It's so overpriced. 20 years later, some guy's going, I could have bought this piece of real estate for $250,000. It's $1 million. It's over $1 million now. Well, who would ever buy this now? It's so overpriced. That was his corollary, his metaphor for stocks.
and the stock market. And just real quick too, and I had a friend of mine, I won't mention any names, but when the Dow was at 1,300 and I first started getting into the market, he told me it was the worst thing I could ever do. It was gambling, and that we were going to have this Great Depression. And when the Dow was at 35,000, he's telling me the same thing. And this was just not too long ago. The same friend, he's been my friend for 40 years. And I said, you're still singing the same song. I've become a multi-deca millionaire from this opportunity, and you're still telling me that it's gonna lead to a disaster. Maybe you missed the boat here, and the boat's continuing to go. But yeah,
you should have given him a copy of How to Make Money in Stocks, I guess, or one of your books.
He's got my books. He's got my books. Yeah. So that optimism, Bill had a great optimism for America. I think that's the real question you want to ask Bill. Is what do you think of America now? Things have changed quite a bit, and there's there's a lot of potential headwinds. And what do you think of America's future? We seem to always figure it out, but who knows? Rome fell, and history has not been kind to empires. So where are we? Where are we with the country? And that will tell you where we're going, maybe with the stock market. But it always ceases to amaze me how innovation and freedom and capitalism always finds a way. And that, I assure you, Bill O'Neil would agree with.
Absolutely. Perfectly said there, Mark. And speaking of innovation, AI, as I mentioned, that's one theme that is working right now. But in your view, if this theme really is going to have legs, should investors not be worried about trying to get into this AI gold rush when it's not perfectly clear we're on solid footing in the broad market?
Well, in the Bill O'Neil theme of this show here, Bill would only be buying these stocks if they were coming out of bases, they were in an uptrend, and they met the criteria. And that's the only way I would buy them. I wouldn't just buy them because they're AI. Never buy the story, never buy the fundamentals unless it's confirmed by the chart. Don't chase stocks that are extended, or you'll be sitting at a nice fat loss real quick. So I would look to, wait for those stocks to set up in bases. If they have the criteria, you buy them. Don't have favorites. Don't have favorite industries. AI there's a great positive story. There's also a great potential negative that a lot of people have talked about. Henry Kissinger, Stanley Druckenmiller, some very smart people. I'm sure you can dig these things up and see, and I tend to agree with them that there's also a big risk with AI. It's sort of like when we cloned that sheep. Whenever we said, what, this is a little too much here. Maybe we better not go down this road. That's sort of where AI is sort of in that same sort of potential. And so we'll see where it leads us. But again, innovation is amazing. And when you have free people in a free country with incentive, they figure out ways and things tend to work out. But we've got a very complex world that's all being brought together with social media. It's truly a world economy and a unified world in a lot of ways. And AI is gonna seal that up even more. And a lot of situations that could happen with China, China wanting to be, the number one. All this about, of the Fed. I know I'm digressing huge here, but the Fed and, keeping this economy going. It's also America doesn't fall behind China. We don't want to be number two. That's the main thing, because we want to keep that number one economic position. So we keep pushing on the string, keep doing everything we can, and we're selling out our future. We're selling out our future. And I'm not getting pessimistic to say that there isn't a great future, but there's bumps in the road. There's bumps in the road, and that's how we go through these bear markets, and that's where we get these corrections. We correct out those mistakes and those excesses.
Yeah. Good points
there. It's natural. The key is don't get yourself cut up and beat up and lose all your money in the bear market. You go into cash, you wait, be patient. You'll have a great bull market. You go back, you look, every bear market leads to a bull market. There will be a great bull market that will take place, and you can make a fortune in that bull market. But the key is you got to keep your powder dry, so you're not just digging out of a hole, as opposed to actually compounding your money instead of compounding mistakes.
Yeah. So, Mark, in your view, when are we going to know if we're in a bull market? What's going to be your signal? What's going to be the evidence?
Well, it's a strange situation right now, because we're bullish on the S&P 500 and even the NASDAQ. We have a particular a timing model that for the market, if you will, the S&P, and that's bullish. But we're really cautious with individual stocks. So there are stocks that are going up. There's always something that's working, but it's just so narrow right now. So I would look to the stocks. And when I see a bull market, I mean when stocks are moving in earnest, when you're really getting, it's lifting all boats. That's not the case right now. Maybe we get a bull market in certain areas, or the indexes do well. They might even shoot back up to the old highs. Back in April of 1995, the Dow was in new high ground for a month or two. I hadn't even bought a stock yet until the Dow was well into new high ground. And that was my biggest year, one of my biggest years I ever had. I was up over 400% that year. So just because the indexes go up doesn't mean that you're having the stocks that are meeting the criteria, the Bill O'Neil Cancelam criteria or the Mark Minervini criteria. You may not have that. So I always look to the individual stocks. I take it stock by stock, and that leads me to being invested. And it's never failed me when there's no stock setups and I go in cash, either in a correction or a difficult market. And when there's lots of stocks and lots of setups, it forces me into the market, and lo and behold, I'm in a bull market. Just a real quick, COVID. When COVID broke and we broke down and everything, all the stocks got slammed and it looked like the end of the world. I was scared to death for many reasons. Never seen anything like that. My assistant Mark Ritchie called me. He goes, it was April of 2020. He said, there's all stocks setting up. Everybody's pessimistic. And I said, that's exactly what we want to see. Lots of sentiment, lots of pessimism and stock setting up. He's like, yeah, but it looks like the end of the world here. I mean, are we gonna really buy stocks here? I said, yeah, we're gonna buy the breakouts. If they don't work, we'll get stopped, but we're gonna buy the breakouts and trust the stocks. And sure enough, Mark Ritchie had one of his biggest years. I think he was up over 300% that year. It was a great year. Stocks took off and had that V recovery. And again, those who were scared and didn't trust the rules and didn't stick to the rules sat there and watched that rocket go into space.
Mm-hmm. Yeah, another great lesson there. So who knows? We could see the same thing right around the corner. We will have to see if we get more evidence and get more breadth in the market, perhaps some signals. We could see that broadening out just a little bit here, but I think more evidence is needed. But Mark, in closing, let's bring it back to Bill O'Neil. Yeah. If he was here today, what do you think would be his biggest advice for investors in the current market?
It would be no different than before. Work hard, study the best winners, go back, look at the precedents of the charts. History repeats. He, in his own model books, IBD has some great model books. He had a great workshop that doesn't exist anymore, but there was a wonderful model book, and it goes all the way back, shows models going back to the 1800s. And you look at Coca-Cola, it's no different than Monster Beverage. The stocks are coming out of cup with handles and flat bases and VCPs, my signature price action, and they've got earnings and sales and nothing different. You have a company, you have a product that's selling, rapidly, and they're putting the fundamentals down, and you're going to eventually the price is going to reflect that if it truly is a strong business. So I don't think he would say anything different than what's in his books and what he's been teaching for decades and taught the world and taught me.
Great. And so speaking of, Mark, some final words of wisdom from you to traders out there, because as you mentioned in your Twitter poll, a lot of traders out there, at least your followers, have been at this for maybe 5 years or less. Yeah. And maybe they are a bit frustrated with the market right now, or still learning the rules. What do they need to be thinking about right now?
Look, people go to school and they'll go to college and put in 8, 12 years to get a job, but they open a brokerage account and with no training think that they should be getting great results because they saw crypto or their friend, made money in the stock market. This is no different than any other business or any other profession. It takes skill, it takes expertise, and it takes time. The one thing, no matter how much Bill O'Neil, myself, or anybody passes on, you can't force experience. So that takes time. You have to gain that experience. I mean, if you were to be a baseball player, a basketball player, a football, these people play in Little League, they play in high school, they play in college. the whole life they dedicate, and before they get to the pros, and then they're a rookie, and it takes a long time to be great at anything. So don't be so hard on yourself and pressure yourself. Give yourself some time. The investment is well worth it, especially if you're young. You're 18 years old, you're 20 something years old, and it takes you 10 years to get to a point where you have the golden goose, like I said. Well, then you've got it for a lifetime. So the younger you are, the more patient you need to be, or you should be. You should give yourself the time.
That makes a lot of sense, Mark. Well, thank you so much for coming on today. And I join you in wanting to, pay our respects and honor IBD founder Bill O'Neil in light of his recent passing. Some memories and lessons that we will never forget, and make sure to share with the next generation of investors. So thanks so much for your part in that.
Bill is iconic. And like I said, I was surprised at myself. I really got choked up over his passing. It was, I was surprised that I took it that way, because I know he's been gone for a while, and he's older, and he's sort of out of the picture as far as being in the
spotlight.
In the spotlight. But I still kind of took it kind of hard. So I even got choked up today.
I know. It's been tough, but it's been really great this week to hear from traders who knew him best and who learned from him, and to get their thoughts as we look to move forward and continue on the legacy in the best way that we can, ultimately in appreciation of what it is that he shared with all of us. So thanks again, Mark.
No problem. Thanks for having me. This is wonderful. I hope it's been helpful for people. And
it's been great.
And rest in peace, Bill O'Neil.
Yes, absolutely. Thank you, Mark. And thanks everyone so much for watching. Hope you have a great weekend.
Take care, Allie.